Worldwide markets this week. Good things happening in South Africa. Results: Astral 91 and WeBuyCars. 91 lists 2 income actively managed ETFs. How to spot the bubble popping, and the year-end power hour. I'm Simon Brown. This is Worldwide Markets episode 657 for 19 November, and I'm recording this just after lunch on Tuesday. Worldwide Markets, powered by Standard Bank Global Markets, Retail, and Shift, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest forex rates anytime, anywhere. Shift, powered by Standard Bank. Thanks to Standard Bank. Thanks to Shift for that. I want to kick off with a podcast I'd listened to earlier in the week. It is Odd Lots. It's one of my regular podcasts that I listen to. And in this particular time, they had Citibank's Dirk on the show. He is global head of macro strategy at Citigroup. And he was talking around bubbles. And he says, by his definition, which is a move 2 standard deviations above the 1-year average, we are in bubble, which means, by his definition, we've been in bubble since May. But then he had another interesting point, because, okay, so we're in a bubble. Now what? Because he was saying, you know what? When you know it's a bubble, you can't get out. You've got to run with it, because that's what matters. So how do you know when it's over? Well, he said, what are the stocks driving it? Well, let's call that the Magnificent Seven. And he says when 2 of those stocks then drop below their 200-day moving average, now you're no longer in bubble territory. It is over. The bubble is popping. So there we got it. Alphabet, Tesla, Nvidia, Microsoft, Apple, Amazon, and Meta. Those are the 7 stocks. I've pulled them up on Koifin. And how many, if any, are below the 200-day exponential moving average? Meta. That's the only one, almost 12% below. We've got Microsoft close at 5.4%, Amazon close at 6.5% above. But by his definition, we are, I suppose we could say we're halfway there to the bubble perhaps being popped. Of course, there's a chance that Meta runs. There's a chance that Amazon and Microsoft don't fall anymore. But at this point in time, using that methodology, and I quite like it, he's saying, yeah, we're in bubble, but don't be scared of bubbles because we're going to make money. The point is we got to exit them, and that's a nice methodology for when to exit the bubble. We'll keep an eye on that and see how it continues in the weeks and months ahead to see whether we really are popping this bubble or whether it's got more legs to go. Certainly Meta's the one folks don't like. They're going to be borrowing a whole lot of money. Fun fact, Alphabet, I was looking at net debt. Alphabet's net debt is a positive number. It's a negative number because they have so much cash. The cash offsets the debt that they sit with. They're just a random screen I was pulling up more recently. 91 has listed 2 actively managed income ETFs. One is for the local market. The code there is 91DINC. And one is for the offshore market. The code there is 91GINC. And we did a webcast with them on Monday. You'll find it on the website, justonelap.com/ETFs. The local one is paying dividends quarterly. Both have a TER of 0.53, including VAT. Both are allowed in the tax-free. The offshore one rolls up dividends into the fund, targeting about a 9% yield on the offshore currently. These have been unit trusts for about 20 years. So we've got some backstory and some history to them as well. And then the offshore one, which is obviously in dollars, but then pays out in ZAR because it's trading on the JSE, sitting at about 4.5%. We've got the video. I chatted with Malcolm Charles. There's a bunch in the first bit where we talk around what's happening in South Africa and how it is suddenly looking a whole lot better, which brings me to good things are happening in South Africa. And I know it feels weird. So let's go back a couple of weeks. We got off the grey list. That was a biggie and a good achievement by everyone involved. Last Wednesday, medium-term budget policy statement from the minister. Our debt is still going up, but that trajectory is it probably won't hit 80%. It starts coming down. We have a primary budget surplus, which means that before interest and debt payments, we have a budget surplus, which I know you've got to pay the interest, you've got to repay the debt, but they're only, according to Malcolm Charles at 91, about a half dozen countries that have a primary budget surplus. And what that means We've got a little bit of extra cash every month, every year to pay down debt. We've also seen our debt yields, our bond yields come down fairly markedly. So we're paying about 2% less. So as debt expires and we reissue more, we get it at a lower price. So therefore, it costs us less. We're getting extra money coming through from the precious metals and the boom we've seen there. So that was all good news. Inflation target now set at 3% by the minister, 1% leeway either side. So effectively a 2 to 4% inflation target. This is a biggie. And one of the reasons is, so we're an export country in some senses, and if our inflation is running at 6 and we're exporting citrus to a country where their inflation is running at 3, well, our citrus fruit the price is running away from the buyers in that second country rather. Whereas if our inflation is 3 and theirs is 3, we are keeping tabs. It's a big deal in that regard. So new inflation target. We've got MPC on Thursday. Are we going to see a cut? I think yes. And here's why. So inflation's 3.4%. That's it's above the 3% anchoring, but it's within the 2 to 4% band. And I know the MPC is going to anchor on that 3, but we're not expecting it to get much higher over the course of 2026. So I think we really can get a cut. And we've got some certainty coming through, which I think maybe gives the MPC certainty around now the inflation target, certainty around the budget, the grey list. And then, of course, the big story was Friday evening, Standard & Poor's global rating upgraded us from 3 levels into junk to only 2 levels into junk. Now, we are still junk status, make no mistake about it. But it was a big move. A massively big move. We've had 16 years of downgrades. Now, finally, we get an upgrade. And importantly, the outlook was positive, which means at their next meeting, they could just upgrade us straight away again. They probably won't. Moody's is chatting, is going to review us in December. They did have this article on, it was Business Day, and they warn SA's debt path still fragile. I'm not convinced by that, but we could potentially see a Moody's upgrade as well, then maybe Fitch. We need 2 of the agencies to have us above a junk status. It's going to take some time. Precious metals are booming. I mean, this is all good stuff for the country and the economy. Load shedding is gone. You know, a year ago, we kind of thought, it's been missing, but we weren't sure. And then we got some early this year. But it is, by all intents and purposes, load shedding is gone. The Government of National Unity, the coalition government, the GNU, is holding. And if we think back to the budget of February this year, where we had to try 3 times to get that budget passed, that wasn't a given. And yet here we are. The GNU's like faded into the background, which is exactly where you want politics. So there is good things happening in South Africa. I mean, it is just that simple. Now, let's be very, very clear. Firstly, we have chronic poverty. We have chronic unemployment. Yeah, unemployment improved a little bit in the third quarter of this year. But to be very clear, we still have chronic unemployment, chronic poverty, chronic inequality. Make no mistake. Those haven't gone away, and they still remain a humongous problem. These aren't, the US gets to unemployment of 7% and panics. No, man, we're 31% and change of unemployment. That is absolutely ridiculous. But we need to get the economy going. We need to get growth going. And then we get foreign investors. And then we can start looking and solving the issues of inequality, of poverty, of unemployment. Those will be the result of it. So I'm not saying that things are absolutely brilliant. And I'm not, saying, the unemployment, the inequality, the poverty doesn't matter. They all matter. Absolutely, they do. Make no mistake about it. But if we get the sort of the economy going, things start to move better. It's also, these are small early steps, right? We've got a new inflation target, but we've got to hold to that target. We've got a budget surplus, but we've got to get our debt down. We've got an upgrade for Standard & Poor global ratings, but we need to get the other ratings agencies on board, and we need 2 more rating upgrades from S&P. So these are small steps. And, it is, how do you turn a country around? Very, very slowly. Absolutely. And I appreciate we could argue that, we've had a very long time of this very, very slow turnaround, but we are seeing tangible signs. We've got green shoots at Transnet. Again, they're not massive, but they're kind of happening. We are moving in that right direction. And the biggie, if we look at Operation Vulindlela, the Eskom was the first one. You have to solve Eskom. That is by all accounts, now been solved. We can turn attention to issues such as Transnet, issues such as crime. Let's be clear, we have a crime problem as well. So are things perfectly going swimmingly in South Africa? No. But are good things happening in South Africa? Yeah, absolutely. And that is important. And I think we should acknowledge it and encourage it and hope that long may it continue. There are, of course, always the risks that we fall off the rails again. That's not impossible either. We've got our year-end power hour up and open for bookings. We have limited seats if you want to attend in person. Webcast, look, we've got limited seats in the webcast, but I don't think we've ever come close to filling it. It is Position Your Portfolio for 2026. This is how we end every year. This will be, I think, the 13th time that I am doing this predictions show. I start off by looking back at what I said a year ago, and I mark myself. That's an important part of the process. It's far too easy to throw predictions into the wind and then you ignore them if you're wrong, and if you're right, you pull them out. Accountability absolutely matters. And then we look forward to 26. What's going to happen? What about gold, the rand, more credit upgrades, etc., tariffs and all of those. JustOneLap.com/events for more information and booking. So let's get to some results that have come in. The first was Astral. They had a horror first half. In fact, they had negative operating margins in the broiler business. That has swung around. There are a couple of things that are working well for them. The avian flu's gone. They're actually vaccinating. I spoke to Gary Arnold, CEO, in my MoneyWeb show on Tuesday morning. They'd vaccinated about 5% of their flock at the beginning of the year. They got approval to vaccinate more on Friday. That could take them as high as 30%. They've got power kind of working, water not, but they've got independent water now. They've got off that. Costs are down. Mostly that is, of course, yellow maize. Those prices have come down. We've also seen they've managed to push some price increases through. They've got prices back to around the December 2023 levels. So a nice bit of profit from them, a nice chunky dividend. The run in Astral, you really need to have bought it a little while ago. If you missed it and you're like, now what? Well, sure. I think there's still more upside to it. Chatting with Gary Arnold on the show, he is expecting a good financial year through to September of next year. Keep an eye on the yellow maize price. As long as that remains where it is, or even maybe going lower, expectations are we could have another good crop next year. Then Astral is looking fairly good, and certainly not looking like the absolute horror show it was recently. We also had results from WeBuyCars, and this is an interesting one. Their trading update absolutely spooked the market, and with very good reason, because they were a mid-20 PE stock, and then suddenly they were coming in and saying, yeah, you know what, our headline earnings is going to be up sort of mid-teens, and that is not a good look, however you spin it. So results came, and earnings were up around mid-teens, and what we now have is a stock in a PE of high teens, still a little bit expensive. Few things. One is that they talk around cheap Chinese cars that they compete against. And I actually wrote about this in the Financial Mail when the trading update came. I said I can get a really great Chinese car for a little over 300,000. Why am I getting a second hand? Now, maybe I want a luxury German sedan. Fine. That is absolutely hurting them. In response to that, they have two things. They say, look, in a couple of years' time, these cheap Chinese cars are going to start entering the second-hand market, and then they can compete in it. They also are seemingly offering less money at certain price points. So if you've got a second-hand car that sort of targets at the same price point as a new cheap Chinese car, they're just simply going to give you less so they can sell it for less. They had some head office increases that's expected from growing. Importantly, they did do 16,000 units in sales in a month, and their target is way above that, but it is about getting that market share. I think the stock is down again as we speak on Tuesday. I think it can probably get down to the low 40s, and at the low 40s, I'm starting to get interested. I've said it before, buying a second-hand car used to be an absolute horror show. Sitting opposite a dealer who had all the information, understanding that you were having to go to some dodgy parts of Durban or Gqeberha or Joburg or Cape Town or wherever you were buying, and do a transaction which is A, expensive, and B, where you have very little information. My wife bought a car from WeBuyCars back in Feb. It was actually in their Cape Town depot. We never saw it until it was delivered because we sent a company called View for You. They charged, I think, $2,000, and they go and check the car. Because I can go and check a car and I can say, like the color, got 6 wheels. That's about my skill set. If it's really wrecked, then I can pick it up. But otherwise, I don't know how to understand and evaluate cars. They don't give you a price. They just say it is a good quality vehicle, and therefore you can make your decision. Or they say it's a bad quality vehicle, which is maybe also fine. Maybe you're buying it at a ridiculously cheap price, in which case, well, the bad quality isn't of a concern because you kind of expect it in that regard. But what they're doing is they're kind of cleaning up and consolidating that second-hand market. There's also a fun fact that because you can go to WeSellCars.co.za, and you'll find their database, and you can query it. So when I wrote the FinWeek Financial Mail article, I could go and say, well, how many cars below 150? How many cars above 350? Those sort of price points, and get a sense of, how many vehicles are there in those different price categories that are directly competing against the Chinese cars? What are they? And you can really do some good due diligence on the WeBuyCars platform using them. I like the stock. We'll see how it goes. The other, of course, was 91. Asset managers love bull markets, so no surprises around that. They had a good set of numbers. The market seemed a little sanguine. In fact, I take that back. The market sold them off on the results, but it has run incredibly hard. So maybe the sell-off is not unexpected in the sense that the market is saying, you know what, we had great expectations for the stock, and well, it met them, but you know what, buy the rumor and sell the news, and maybe that's what we're seeing in that regard. It's trading on a P of around 11. It's got a dividend yield of around 6. These are both very cheap numbers in that sense. If you are thinking that the bull market continues, then you want these are well worth having a look at. Price targets are between 40 Rand and 65 cents and 55.78 on the upside. The average is 47.34, which is about where it's trading right now. 2 buys, 2 holds, and 1 strong sell from the 5 analysts covering it. It is, when I do the stock watch, this is one of the stocks which folks have been liking a heck of a lot. The other is Coronation. They had results out as well. They took a hit, and that hit is because last year they had the extra money from winning that SARS case that went to the Con Court. So that means that they had a higher number last year. Because remember, they put aside a provision, so that then goes out. They don't need the provision. It then comes back in, boosts the numbers, special dividends. You don't get that repeating. So then you're left with saying, well, hey, yep, here we are. And then the Rand. Last week, the Rand got below 17 for the first time since early 2023, which was definitely a biggie. It didn't last. Thursday was just generally an absolutely giant day, and the currency was a part of that giantness. On this chart, it got as low as 16.95. It is now back at 17.20. The trend continues, and I'll talk more about that in our year-end power hour. And then gold, because gold is holding, not running, and that's an important distinction. But we've got that sort of trading box between around 39 and 4,000. It's at 4,050 at this point in time. If we squeeze it on a daily chart rather than a weekly chart, we can certainly see it continues to hold. 3,925-ish or 20 would be my concern point, because then we've got lower highs and lower lows. We're some ways off from that right now, so it is hanging on. Quick last point. I spoke about the bubble at the top of the show, and I was looking at the drawdowns on the Nasdaq and the S&P. The S&P is about 3.5%, 4% off all-time highs. The Nasdaq around 5 or 5.5%. All this fear and mongering and everything for, frankly, not very much. Now, Bitcoin is looking a whole lot uglier at under 90,000, and we have NVIDIA results on Wednesday after US market close. That is the biggie. NVIDIA need to come to the party, otherwise things could get very quickly quite ugly. Worldwide markets, powered by Standard Bank Global Markets, Retail, and Shift, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest Forex rates anytime, anywhere. Shift, powered by Standard Bank. Thanks to Shift, thanks to Standard Bank, we'll leave this week here. My name is Simon Brown. Next week, I'm going to look at the JC listed shares over 10 years. What have been the best returning stocks? I think there might be some gold miners there, but all that return came in the last 1 year. So we'll have a look at that. And then, as I said, then we're going to be into December. We'll have a show or two. We'll look back at this year, and then we're back in January. My name is Simon. Look after yourself. And as always, if you can, look after somebody else as well. Cheers all.